What's going on, family? This is not financial advice. Do your own research, man. When it comes to the stocks you choose, man, we've been out free game for you. Man, we got a hot stock on the list I want you to watch and be on the lookout, man. They got this bill passing for the chip, and I'm going to tell you exactly what stock I'm watching for this chip explosion. But before we get into that, we're going to get you in this video. It's going to be talking about the used car market, and the bubble might be about to pop. Inflation could be peaking within the next couple months. Check this out.
Many are also struggling to afford the vehicle at the end of it. Experts warn that the market bubble for used cars might explode in the coming months. Wholesale prices for used cars reportedly increased 44% in November 2021 compared to 1 year before. KPMG firm claims decades of data from prior years, quote, show nothing compared to this unprecedented spike.
So joining us now is Lisa Bilfus-Popeo. She's a senior writer for Barron's. Lisa, welcome. You wrote an article about the alarming rise of car repossessions that was published just last week. So what is driving the explosion of these car repossessions?
Thanks so much for having me. So my reporting suggests, a few dynamics are kind of clashing and colliding all at the same time. You've got used car prices, as you mentioned, they've skyrocketed since the beginning of the pandemic. That's in part because the price of new cars has gone up a lot, but the supply of new cars hasn't been able to meet demand because of a chip shortage and other shortages that have come up since the beginning of the pandemic. So you've got used car prices skyrocketing and people having to borrow more and more in order to actually get their hands on a car. At the same time, you had a lot of people over the past 2 years, because of some of the pandemic aid programs, they had heightened income. And so because of, say, stimulus checks and debt forbearance, they had temporary pops of income. And banks, according to my reporting, weren't really doing income verifications the way that they have in the past. So you've got people borrowing more. There's a metric in the industry called loan to value, LTV. And I've heard that some of those were as high as 140%, meaning people are really underwater at a time when inflation is, people's incomes on an inflation adjusted basis are falling. People are having a harder time paying for basics like food and energy, and things like car payments are getting harder and harder to pay.
So is that really sort of the dynamic at play here? This is related to the used car bubble that experts fear is close to popping.
So some experts I've spoken to have been worried about a used car bubble now for a couple of years. But then, the pandemic programs I mentioned, some of those helped people during the past 2 years. So the bottom didn't fall out. But now people are saying it looks like this could be the time when things are starting to happen. And one red flag is that the rate of repossessions for prime borrowers is starting to rise. So it's not just subprime borrowers who are having a harder time, because those are typically lower income consumers. But now what I've heard is that the rate of repos for prime borrowers with better credit has doubled to about 4% over the past 2 years.
And Lisa, what do people think is behind that? What's affecting those prime borrowers? Why are they not able to make their car payment?
So a couple of things.
Man, as you can see, man, we got a lot going on in this market. I'm thinking inflation is going to peak within the next few months, and they're going to have to cut rates in 2023, man. That's what it's looking like. So Nvidia, man, we got this banger on the list, man. This is probably going to be the big dog of the chip, man. So they're down negative 2.88% on the day, and they're coming down to a great support level around a little over $100, around about 110, 115. That's the price target that I'm looking at for a buy for me. They're coming down to support at the 200, and they got strong support there. They got a few touches verified, and that would be another push down to support, man. So that's what I'm looking at for a buy range for me. I will be dollar cost averaging in this one. If it breaks below that support, I'll be looking for $100. Around $100 will be my next buy-in point. So that's what I got, man, for the long term, man. Nvidia is going to pop. As you know, we got the chip bill coming out, man. We got a shortage of chips, and they're trying to create this chip bill for to keep the chips coming through to America, man. They're trying to based on the shortage, man. They're trying to make up for it. They're trying to compensate by creating this bill so they can keep the chips in house now. So that's what it's looked like. What's going on because of the shortage, man. So now we just got to be on the lookout for these great opportunities, man. Just keep your eyes open, man. Happy trading. I'll see you guys tomorrow. Like and subscribe to the channel, man. And we'll see you guys tomorrow. Out.